The Korean economy posted slightly improved growth in the second quarter, but concerns linger about the strength of the economy, with GDP growth remaining stubbornly low. Kim Min-ji looks beyond those numbers.
Korea's economic growth has remained under the 1% mark for 3 straight quarters, fueling concerns that the country may be headed for a lengthy cycle of low growth. The Bank of Korea says the country's GDP rose 0.8% in the April to June period from the previous quarter. It's modest but better than the first quarter, which saw growth of just 0.5%.
Second quarter growth was mainly led by a rise in private consumption. Spending contributed 1.2 percentage points to GDP growth, a turnaround from the negative 0.2 percentage point in the first quarter.
In fact, private consumption was up 1% on quarter, in contrast to a drop of 0.2% in the first 3 months of the year. Investment in construction jumped more than 3%, while facilities investment was up 2.8%. But the outlook for growth down the line remains murky, with the Bank of Korea revising down its forecast for this year to 2.7% in July.
We think that the growth momentum will continue to show some recovery. However, industrial restructuring and also a slow pace of the developments in the global demand, as well as there is some concern left with the Brexit uncertainties, will pose some downside risk to Korea economy.
The central bank has kept its key rate at a record low of 1.25% since June, and the government has also drawn up an extra budget, leading analysts to believe the BOK may wait to gauge the impact of these expansionary measures before opting for another rate cut, possibly in the fourth quarter. Kim Min-ji, Arirang News.